Yes.
All right, so just quickly, I don't want to spend too much time on the introduction. I don't know how many of you really know about Ash and what we are and what we do. But we are an integral part of the nonprofit community, certainly in Houston. There are executive service corps around the country, I think somewhere around 16 or 18 right now in different parts of the country. We are the only ones in Texas. And although we were formed to cover the greater Houston area, ever since COVID, when everything pretty much went virtual, we've been expanding and we actually do projects now throughout Texas. And we have people attending some of our seminars and webinars that are actually all over the world. I guess they go on Eventbrite and they search for nonprofit consulting, and then they come up with our webinars and they sign up. So we've had people on our seminars from Australia, from London, from India. And so it's a worldwide operation right now. We were established in 1984. So last year actually was our 40th anniversary. We've been around a long time. We've worked with a lot of nonprofits in the greater Houston area. Our mission is to promote best management practices within the nonprofit sector. And we are a 501c3 nonprofit ourselves. So we have to follow all the requirements of the nonprofit community. We've got right now about 30 consultants, mostly retired professionals who come out of the for-profit business, but we have a number who have been in nonprofits for a long time and participate in our consulting work. As I said, we initially was set up to work in these 6 counties, but we've now expanded with projects throughout Texas. And we work in all these different areas. These are IRS designated subject areas, and we've had clients working in all those areas. Our specific clients are probably, most of our clients are in this lower category. This is the number of people in the client organization that we work with. So they're smaller operations. We do work, however, with some bigger nonprofits that have 10,000 plus clients. And so we've got a mixture in there. But probably our hotspot is in the middle here, getting towards the smaller size. So we provide management training and support for the nonprofit sector. And we help nonprofits operate more efficiently, maximizing their philanthropic efforts. So this is one of the problems we have in measuring our impact, because we don't impact the people directly that you people who run nonprofits helping people, you help them directly. The benefits of your organizations. And by doing this, we created a stronger general community and empower nonprofits to contribute more and provide the assistance that for-profits or the general public cannot provide. And we calculate that through you as nonprofits, we impact over 200,000 people a year. So it's a pretty big impact. And the type of services we offer go all the way from organizational assessment through planning work, policies and procedures, IT, et cetera. And I'll talk a little bit about some of these when we get into the details, but you'll get the copy of this presentation, so you'll have all this information. So let's talk, let me just make this smaller. Okay, so let's talk about nonprofit startup. So first of all, nonprofits are different from for-profit businesses. they both are businesses. They both need to be looked at in terms of functioning as businesses, although the nonprofits have a community service motive rather than a profit motive that for-profits have. So that's the main distinction, that we're in this business, in the nonprofit business, to do some sort of community service. There are some restrictions on how much you can pay yourself. If you're getting into a nonprofit to set up a new nonprofit just so that you can take a salary out of it yourself, forget it. Because you can do it. It's not illegal to pay yourself as a founder, but it's frowned upon mainly by the donors, because donors don't want to give money to pay salaries. They want to give money to do service to the programs you have. Now, sometimes you can say, well, you perform the service. You are doing the programs, and therefore you're entitled to some compensation for it. Yes, that's true. And if you are doing that, then you can consider yourself being an employee. Employees, of course. Was there a question or somebody just piped in? If you're just listening to this, please shut off your microphone so we don't get feedback from the audience in the presentation. So as I said, there's no legal restriction on paying, let's say, board members or the founders of a nonprofit, but funders do not want to give money to pay salaries. They want money to go to the programs. It's somewhat more expensive to form a nonprofit, and it's a little more complicated to do it than to form a for-profit. You have some greater reporting requirements. The IRS requires an annual report called a 990 form. And even if you have no income whatsoever, you need to file the simplified 990 form, but you have to file it. If you don't file a 990 form for 3 years in a row, the IRS will automatically rescind your 501c3 status before they even tell you about it. So it's good just to remember that every year you've got to file a 990 form. Usually the filing date is around mid-May. And if you've got a fair amount of income and expenses, then you have to report all that to the IRS. You can get an extension to the filing to October pretty easily. There's a form you fill out and send in, and you'll automatically granted the extension. There are more regulations to follow. Just because the IRS is giving you some benefits on the tax side, they expect you not to be doing a lot of political activities. And so it's somewhat restricted how much of that you can do, but you can do some. You can advocate for policies. The restrictions are more related to supporting an individual running for election. There are some additional functions. Basically, a nonprofit needs to have a board of directors. There are no shareholders to a nonprofit. Nobody owns a nonprofit. It's a public corporation. But you need, according to the Texas laws, you need a minimum of 3 board members to run a nonprofit. And those board members have all the authority of the board. They also have all the legal responsibilities of the board. You need to do fundraising, which for-profits don't need to do. But you can sell items and charge for your services. That's perfectly legal to do. And then you need volunteers. Obviously, if you're starting up and you may not have much money, it's best to run your operation with volunteers so that you don't have to pay salaries and use up your whatever funds you do have. The higher failure rate, I think both for-profits and nonprofits have pretty high failure rates. So those that form, I've heard anywhere between 35 and 50% of new formed nonprofits will fail within the first 5 years of operation. So you gotta make sure you know what you're doing, and why you're doing it is probably the easy part, because you're getting into it because you have some feel that you've got to provide this service. But knowing how to do it and to maintain yourself so that you can survive is what's difficult. Okay, so these are the steps for filing to become a nonprofit. The first is to file with the Secretary of State of Texas. And this is through a form, what they call 202, with the Secretary of State's office. And you get from that a certificate of formation for a nonprofit corporation. In other words, if you get this certificate, you are then a nonprofit corporation. You get all the benefits of being a corporation and all the benefits of being a nonprofit. Now, this has nothing to do with the IRS. So if you do this, you can become a nonprofit corporation in Texas and stop right there. But the IRS will still come after you for taxes if you don't get the IRS 501c3 designation. So you are a nonprofit once you get the certificate of formation. The key things to get the designation or get the certificate of formation is that you need a unique name. You cannot use a name, the exact same name that somebody else is using, or something that's very similar. You can do a name search on the Secretary of State's website. If you just do the search, it costs you $1 through a use of a credit card or debit card. You don't need to do it that way. You can call the Secretary of State's office and ask them if you can use a name. And I don't know how efficient that is in doing it. Sometimes they'll answer you, sometimes they'll tell you to go to the website and search for it that way. But you can do that, or you can just go ahead and file the certificate of formation with whatever name you want to use. And if it's not acceptable, then the Secretary of State's office will not charge your credit card the $25, and they will not grant you the certificate, but they'll tell you that you need to choose another name, and you can go back and choose another name and refile. So it's not so difficult to check the names first, but as is the case with all governmental websites, it's not the easiest thing to go through. The next thing is the exemption from sales tax and from property tax. And that you actually have to do with the Comptroller's Office, the Texas Public Comptroller's Office. And usually you do that after you've done the IRS filing, because it's a lot easier. There is a form to send into the Comptroller's Office, but if you can attach the 501c3 form from the IRS, it goes through very fast. There's no charge for that. And you get this exemption from these taxes. Now, if you don't file for this exemption, then every year the Comptroller's Office will send you a letter saying you may owe some taxes. In most cases, you don't, but you have to respond to the Comptroller's letter. If you don't respond because you feel you don't owe any taxes, so you don't need to respond, then they take it as an indication that you're no longer in business. And so they may withdraw your certificate of formation. So it's very important. If you get a letter, if you get any letter from the state or the IRS, always respond to it. Even if you think it's garbage and doesn't mean anything, doesn't pertain to you, respond to it. Even if you tell them that you don't think it's applicable to you, send something in to respond to it. Otherwise, they always feel you've gone out of business and they take away any records they have for you. Okay, so when you have the certificate of formation from the state, then you go to the IRS website and you file for an EIN, Employer Identification Number. This is a number by which the IRS will recognize you forever after. It's similar to the same thing if you were for-profit or an LLC. you'd have to go through and get an EIN. It's really just an identification method for the IRS. And it's a way that they can follow what's happening to you. Then you need to file either a Form 1023 or a 1023 EZ form with the IRS. This is the form to get the 501c3 designation from the IRS. And the qualifications, if you're going to file the EZ form, which is really easy, in that it's like 2.5 pages long, you do not have to attach anything to it. You basically have to attest, you check a box saying that you have bylaws, that you have the certificate of formation, that you have a conflict of interest policy, and that in your best faith estimate, your total revenues coming into the organization, meaning not only cash, but in kind contributions and property contributions, the total value of the revenue coming into the organization will be less than $50,000 a year for each of the first 3 years. So basically what they're saying is they consider this a very small operation, and they don't want to take the time or have you take the time to fill out this full 1023 form, and then they have to review that, and it's just a mess. So they have this easy form, and it costs you $275 to the IRS when you file it, and you have to file it online. You can't print it out, fill it in, and mail it in or fax it in. You have to do it online. If you don't qualify, and there are some other qualifications that you have to comply with, but this $50,000 limit is really the key one. All the others are pretty simple to agree to. If you don't qualify for the EZ, then you have to fill out the full 1023 form, which is about 12 pages long. And it's got a whole bunch of appendices if you fall into certain categories that you have to fill in also, like churches and schools and hospitals, things like that. But when you do the full 1023 form, you do have to attach a copy of your bylaws. You do have to attach your conflict of interest statement, or at least acknowledge that you have one. And you do have to give them financial information. You can either do that by filling out one part of the form that is set up to do that, or you can attach an attachment to it, to the form. And you have to give some brief narrative of what you're going to be doing. Basically, your programs, where you're going to be doing it, how much time people are going to be spending on your programs. It's somewhat detailed analysis. And if you do file the full 1023 form, that filing fee to the IRS is $600. Now, if you should file the EZ form, and your best faith estimate is that you're going to be under $50,000 income in each of the first 3 years, and it so happens, let's say in the second year, you get a $75,000 donation. You do not need to go back and refile with the IRS, and you do not need to pay any penalty. So the IRS assumes that if you made your best faith estimate, that's good enough for them. Now, if and what'll happen is that, let's say you get the $75,000 donation in year 2. Then in year 3, you'll file the 990 tax report for year 2. And in that filing, you'll put in the $75,000 donation you got. And so the IRS will see it at that time. And if they have any reason to question that or want to ask you any information, they will come back to you at that time. But they will not penalize you for not having realized or foreseen that you were going to get that money. And there is one other caveat to that, and that is that the IRS will occasionally do a random audit of the easy forms so that they will decide themselves that to pick out an easy 1023 easy filing, and they'll go back to the people who file it and they'll say, please give us a summary of your financials, basically so that we can affirm to ourselves that you did file properly. So that the chances of them actually doing an audit and asking you for that are very slim. But they do, as I said, they do random audits, and we have had one client where that happened, where they came back after we filed the easy form, and then the IRS asked for the detailed financials. And fortunately, we had done a business plan before the filing, and we had all the financials that we had estimated at that time to show that we were going to be under $50,000. We took that, sent it to the IRS, and that was the last we heard of it. Okay, now we feel that any reasonably intelligent person should be able to file with the state and the IRS themselves. However, if you talk to a lawyer will always tell you, you need a lawyer to file it for you. We tell you, you don't. And there's no requirement that you do it. The problem always comes up with people who feel uneasy dealing with the IRS or feel uncertain about some of the things that the state or the IRS ask on these forms. You can go to the Secretary of State's website and to the IRS website and download copies of these forms so you can see what you're getting into. And if you have questions or concerns about some of it, you can ask us those questions and we give responses and no charge. If you want us to sit with you while you do the filing or to even file in your name, we will do that also, but then we charge a fee. And the fee depends on how much we are going to do, whether we're just doing the filings or you want us to do the bylaws, conflict of interest statements, work on the financials with you on that. So we will charge a fee. It'll be a lot less. It'll be in the $300 to $600 range. If you go to the internet and search out for organizations that will do the filing for you, you may pay thousands of dollars for it. And it's not going to be any better. Now, I've seen some websites where they say they guarantee that you'll get the 501c3 approval from the IRS. There is absolutely no way they can guarantee that. The IRS will make up its own mind. So that's kind of out of the picture. It's a sales point, I guess. So just to keep that in mind, that if you're just wanting us to answer questions, there's no charge. If you want us to assign somebody to work with you, then we do have a charge. Now I'm going to stop here just for a second to see if there's anybody that has any questions on the filing. If you do, just unmute yourself and ask the question. Nobody? Okay. And again, you're going to get a copy of this presentation. And if you have any questions after the presentation at any time, just contact us and we'll be happy to try to answer them. Okay, so now running your nonprofit is really the harder part of this whole process. Number one, raising money is a constant challenge because you're going to have expenses and you have to cover them somehow. If you've got a paid staff, it's going to be expensive. A lot of nonprofits start the first year, all volunteers. They don't have any paid people, any employees. The second year, maybe they'll pull on some part-time employees. And then the third year, maybe a full-time employee. But once you start putting employees on the payroll, then your expenses start going up kind of fast. So you've got to attract and motivate volunteers. We say motivate because a volunteer is just that. You have nothing to hang over their head if they don't want to do what you want them to do. So you want people who, first of all, they're going to come to you if they're volunteering because they're motivated to follow the mission and to do the programs you want to do. However, you may ask them to do things that they don't want to do, in which case they can leave, or you can ask them to leave, but you can't put any other types of pressures on them. Then you need to have some financial controls. They don't have to be much. When you start out, you can probably work your financials on spreadsheets, but as you grow and the monies become larger, you may have to go to a computer program. And there are several which are used by nonprofits. They're all pretty good ones to use. You'll need to have bylaws. Actually should have them before you do the filing, you should have the bylaws in place. The bylaws basically describe how you're going to run the organization. It's going to address your board operations, the meetings you have, how are you going to vote, how do you remove people from the board, how do you increase people, if you want to put a term limit on it, on serving on the board, you can do that. You're going to have to, and the bylaws address the officers you're going to have. You may have a president, a vice president, treasurer, secretary. You might want an executive director who might be a paid pay employee or an unpaid. We basically advise that people on the board should not be paid for being on the board. That if they can be paid if they're providing a service to the organization, but just for being on the board, they should not be paid. And you need a conflict of interest statement to make sure that the board is not using the nonprofit for their own personal gain. That's basically the reason for it. I think this is probably out of place, but this should be when we talk about fundraising. But just briefly, when you approach a donor, you have to tell them what's the service you provide, who are the people that are getting this service, what's unique about your organization and your capabilities to provide this service, and how you financially sustain the operation. Donors don't like to be obligated to give money year after year after year. They may, but they don't want to be the ones that are sustaining your organization. I'll talk a little more about that when we get into fundraising. Okay, so on the path forward, we have these 3 stages of your operation. If you're in a startup phase, then you should really do what we call a feasibility study. It's basically a business plan, which will outline to the best of your ability how you think your organization is going to start and build up over the next 2-3 years. And it should have some detailed action steps so that you can decide how specifically that you can measure whether you've done it or not. For example, if you do this feasibility study before you register, one of the action steps might be register with the state, register with the IRS. So you would put that as an action step. You would have when your best estimate is that it should get done and who's going to be responsible for doing it. So that hopefully then it'll have a better chance of getting done. And then during, as I mentioned before, in the early years, that you're going to have to look at how you're going to fund these operations without getting donations. Now, if you personally have a reputation that is known in the field that you're going into, you may be able to get some money without having the experience, but without having the organization having the experience. But in most cases, donors are reluctant to give money to organizations that have no track record of being able to do what they said they want to do and have shown success in doing it. Okay, then if you've been in business for let's say 3 years or so, you might consider yourself a young nonprofit. Then you should do a business plan, focusing on what accomplishments you've had to date, focusing on board governance to make sure you're operating more efficiently, focusing on market research. Not only, well, this is to identify funding sources, but also to make sure that you're trying to get the clientele that you're looking for. You may need go after more people. You may initially start out, you don't have the resources to work with a lot of people, but as you build up some expertise and bring on more volunteers or some employees, then you may want to increase the numbers, and where are you going to get these people from? So that's the marketing research. And then when you're going to go for more funding, then you have to be able to create what they call the case statement in order to justify the monies that you're being asked for. And I'm going to cover this again in fundraising when we get to it. And then if you're a mature nonprofit, meaning probably more than 5 years in existence, then you might look at doing a strategic plan. And in the strategic plan, you would look back on how you've worked over the last 5 years. What worked, what didn't work, what were the good things that you've had, the bad things. How does the outside environment look to you? Like nowadays, and there's an immediate problem with the government cutting back on funding that will normally go to nonprofits. How is this environment going to affect how you do your fundraising? Or if the government is cutting back on other resources, um, if, for example, the the federal government cuts back on supporting special needs services in schools, that money usually flows from the federal government to the state government and then down to the users. But if that money is cut and then the state of Texas doesn't have that money to give out either, then you got to look at what are you going to do with these special needs children? How are you going to handle that program? So you got to look at the external environment. Then you also have to have the same type of execution plan. What is your organization going to look like in 5 years? What kind of additional programs are you going to have? How are you going to expand the present programs you have? How does this require increasing the board governance? How many people are on the board? And again, you should have, at the result of the strategic plan, you should have an action plan which defines measurable steps that have to be taken certainly over the next year, maybe even longer. You may at this time say, well, we need a building of our own. So we're going to have to go into a capital campaign to raise money for a building. Well, that's going to take a number of years. So there has to be a schedule set up for how you're going to do that. So it's a little different if you're in a mature nonprofit. Okay, this is a little more detail of what goes into the feasibility study. And again, as I said, it's the same thing as a business plan. You do the executive summary last, but you need to do a mission, vision, and values. And we have a more detailed breakdown of what goes into each of these items. If you wanted to do a feasibility study or business plan yourself, let us know and we'll give you the more detailed breakdown. And if you do the business plan yourself or with your own board or your stakeholders, people who are supporting your mission, what you want to do, if you want to do it yourself and send it in to us for review, there's no charge. We will review it and send you our comments. If you want us to assign a consultant to work with you on the feasibility study or business plan, then we charge $150. That's all, to go through this whole thing with you. You do most of the work anyway. We just kind of guide you into the areas and kind of emphasize things you should do and not do. So the thing with the mission in particular is that you can spend hours and hours and hours discussing the mission, because everybody who'll be involved in the discussion has their own idea of what words to use. Should you use this or that, or he or she or them? And you can argue about those things for hours and not get anywhere. So we usually recommend, when you're working on a mission statement, spend a fair amount of time, maybe a half hour, an hour on it, agree on a general principles of what goes into it, and then move on. And then by the time you get to the end of the plan, you can always go back and revisit the mission to see if you want to make any changes in the wording. But the mission's got to be short enough that people can remember it, and it's got to be clear enough so that it explains to a reasonable extent what you're doing. They call this quite often the elevator speech. What can you tell a person about your organization in the time it takes for it to be on an elevator going from the first floor to the 15th floor, or something like that? So you have to be able to explain it pretty concisely. You need to do a needs assessment. Why is there a need for this service in the community? Now, and then with that, a competitor analysis, because undoubtedly there's somebody else somewhere that's doing almost the same thing that you're doing. Now, they may not be doing it in the same area or with the same population of people that you're doing it, and that's one way in which you may be unique. But doing the programs that you want to do, undoubtedly there's somebody else somewhere that's going to do it, that's going to be doing it. And if they've been doing it for a while, then why would a funder give money to a new operation when they can go to one that's been doing the same thing for a while? So you have to be able to develop what is your unique aspect to this. And as I said, it may not be a unique aspect to the program, although it may, but it may be that it's in a certain area of town where there is no competitor doing it. Or it may be with a certain population of people that are not being addressed by anybody else. So you just have to do kind of an analysis and determine where you're unique. Then you need to demonstrate, or you have to identify the programs. And for somebody who's starting up, we usually recommend that you don't have more than 2 or 3 programs. If you have a dozen programs, you're not going to get any of them done in a reasonable way. So you got to pick on the ones you want to concentrate on, that you feel will have the most impact, and that you feel comfortable putting them together and operating successfully on them, and concentrate on them. And then while you're talking about the programs, you're going to try to get an idea of what it's going to cost you to run these programs. And by doing that, you kind of build that up into an expense budget for the organization. You put in all the expenses for the programs, and then you add on the administrative expenses, marketing expenses, fundraising expenses, which are added onto the basic program expenses to come up with a total budget. Then once you have that, you have a good idea of what your needs are. Then you work on a fundraising plan. And in this feasibility study, the fundraising plan basically identifies the different areas where you can look for funds. And then you have to address each area and see whether that's reasonable for what you're doing. We're talking about foundations, corporations, individuals. You're going to be having special events. Government is one. So you can identify them and then try to understand where you think the best chances are of getting some money. You'll also have to look at what your organization is going to have to look like. When you're first starting out, it may be that the board of directors with some volunteers are going to be doing all the work. So maybe you don't need much of a structure. But once you get the program set up and you get volunteers and employees set up, you have to have some sort of management structure so that people can concentrate on the areas in which they are working. You may have somebody who's in charge of the program, somebody who's in charge of accounting, somebody who's in charge of other administrative work, somebody who's in charge of fundraising, or some combination of those. Then you also need a marketing plan, which is different from a fundraising plan. Usually the marketing plan pertains to getting clients and getting volunteers. I would personally put this donor cultivation in the fundraising plan, but what this refers to is that when you get a donation from a funder, you need to go back and thank them and thank them again and thank them again. Try to get them interested in what you're doing, to follow what you're doing. You send them newsletters or annual reports so that they'll want to come back and give you money again. I think frequently a donor stops giving to an organization, and when they're asked, why did you stop? And the funder says, well, they never asked again. So we just stopped. So you need to put together this plan. And as I said, we can help you do that. The business plan is essentially the same outline. The one reason we changed the name feasibility to startups is that frequently when we came to startups and we said, we want you to consider doing a business plan, they heard the term business and they froze up because they're not used to being in a business. So we changed the name to feasibility study, but it's the same thing. Okay, any general questions on any of those items on the startup? No, okay. Okay, so let's get into board governance. Oops, oops. Get back on the sharing screen. Okay, here we are. Okay, so let's talk about board governance. Can you all see that?
Yes.
Okay. All right, so did you know that a nonprofit has no owners or shareholders? So nobody owns a nonprofit. There are no shareholders, meaning if you have a profit at the end of the year, there's nothing, none of that money is distributed back to so-called owners or shareholders. The board doesn't receive any of that money. It gets, any profits go back into the organization. Now, nonprofits do and should make money at the end of the year. And the main reason is that the expenses of a nonprofit are pretty even throughout the year. If you've got salaries to pay, if you've got rent to pay, leasing things, those are all fairly constant month to month. But the income will vary up and down depending on when people give you donations. And historically, most donations are given towards the end of the year. So you have to have money at the beginning of the year to cover you for your expenses as you go through the first several months of the year. If you can, we like to recommend that you have about 6 months of expenses in the bank at the end of the year. Now, quite often, people can't do that. So you do it with whatever you can, but you do need some cushion when you start the year because your expenses are going to be ongoing. So there's no distribution of any profits, any surplus, goes back into the nonprofit and the mission. If you close a nonprofit, all of the assets must be given to another nonprofit. So you cannot take anything back. If you donated something to the nonprofit, even if the nonprofit is not shutting down, if you donate it so that the ownership is now with the nonprofit, you cannot take it back. So this doesn't mean too much if you're donating a computer, say, and you know you can't get it back. Well, that's fine. But we've had one client one time whose mother had a small house, and she wanted to donate the house to the nonprofit. But when she retired, she wanted the house back for herself. No, can't do that. Once it's in the ownership of the nonprofit, the individual cannot get it back. You can lease it, and maybe that's the best way to go. If you have a house you wanted to give to the nonprofit, you lease it to them. Then the ownership is retained by you, and the nonprofit would pay a leasing fee, or you can waive the leasing fee, and that could be a donation. The founder can be removed by the board. I think I mentioned that before. The board has all control on other members of the board, on employees, on the founder. If the board of directors decides they want to get rid of you, usually the problem is not that the board of directors wants to get rid of you. Usually they want to keep you, certainly in the early years, because you had all the vision, you had the idea, and you were doing most of the work. So they want to keep you. But if you've been there 10, 15, 20 years as the founder, and they say, well, you know, we really need to move on to some other areas, and we're not getting all that support from the founder, then they may want to get rid of you. And as I said, the board of directors is in charge and legally responsible. Okay. No, wait a minute, not rolling. Not frozen. It looks like my screen is frozen for some reason. Okay. Do it this way. Okay, so the nonprofit board basically sets direction, makes policy and strategy decisions, and oversees and monitors performance. Ensures that the organization's public service mission is achieved. Now, a key thing of this is that in this monitoring phase is that the board has to maintain knowledge of what's going on with the organization's finances. If the board isn't paying attention, then who's ever controlling the finances, in many cases it's the executive director, they do whatever they want and the board never sees it. Now, even though you may have controls involved and in place, and most organizations should have financial controls in place, if the board isn't paying attention, then you can get into a pretty nasty situation pretty fast. And we had one client that was a healthcare organization, and the board wasn't paying attention. The executive director quit and took a whole bunch of money out of the organization. And the board didn't find out till a year or so later when the IRS came knocking on the door asking for them to pay withholding taxes for their employees that the executive director hadn't paid. And then they realized they didn't have the money, and they had to kind of reform the whole nonprofit. So it's good if you have regular meetings of the board. They can be monthly in the beginning, they can be quarterly. I don't personally like the idea of making them annual or even twice a year, because the board's got to be informed more frequently of that. But if you do it quarterly, then there should be a financial report gets presented and discussed before the board on a quarterly basis. And the treasurer should review those, the treasurer who's on the board should review those financials before it goes to the board, so there are no surprises. So the board members have the legal responsibilities for what they call fiduciary responsibilities. There's a duty of care, duty of loyalty, duty of obedience, and this is more common sense, that the board has to be looking out for the interests of the nonprofit rather than their own interests. Okay. So board responsibilities, establish the mission and vision. They select the executive director, who may be under contract, but they could be an employee. They evaluate the executive director. They do planning if there are things that the organization is going to look at on a 1, 2, or 3 year basis. Monitor the programs, ensure adequate financial resources. Protect the assets, ensure legal and ethical integrity, enhance the organization's public standing, and build an effective board. Then the board composition, it should be a broad variety of expertise. There are spreadsheets you can use where you have list the board members, and you list one axis to board members, the other asset what skills they bring to the board, and you can check off the ones you want. If you want a financial or accounting expertise, you want marketing expertise, fundraising expertise, and you see who on the board provides that. If there isn't anybody, well, maybe that's the next board member you look for, somebody with a particular expertise that you feel is important. Usually the work of the board can be allocated to smaller focused groups, such as nominations and governance committee, a finance and audit committee, compensation and staff development committee, fundraising committee. You don't need to have these committees. If you had enough activities going on, then you can do them, either put them in your bylaws as standing committees, or do it ad hoc whenever the need arises that you create these committees. They need to have a realistic fundraising plan, strong internal controls, evaluation of the programs, and then the strategic planning work when you're ready for that. Financial management basically includes the financial roles of who is responsible for doing various things, making the deposits in the bank, checking that should be different from the one who does the analysis of the monthly statements, receives cash, writes checks, or handles the electronic disbursement. I had a question this morning, and I talked to a similar group about these financial management, about bank accounts. So I'll go back a little bit and just tell you that once you get the state approval, the certificate of formation from the state of Texas, and you get an EIN, you can go to not any bank, but you go to a bank and you can open up a bank account. That's all you really need. Frequently, they will also require a statement from the board of directors authorizing you to open the account. And then you have a bank account, and all financial dealings that the organization has should go through that bank account. There was a question came up about, do you really need two signatures on a check? And the particular bank that this organization was involved with had told them they do not need that anymore as long as they had a debit card and used the debit card. And so my response really was, if I asked them, do they still give you the checks if you want them? And the answer was yes. And I said, okay, well, if you write a check, then your internal controls should say at what level you might want to have more than one signature. It may be $1,000 or maybe more, but under that, then you need only one signature. But that if the bank says that the debit card is sufficient and that everything else is being done electronically, the bank is paying your bills for you electronically, and you're receiving donations electronically into your bank account, then there shouldn't be any problem. So you need to keep records. You need to file the 990 every year. Budgeting you need to do each year. Financial reporting, the 990. Financial operation and analysis, if you want to do that, to see whether, if some of your programs show that they're this is like the Doge group in the federal government. If you can analyze your operational programs and find out that you're spending a lot more money than you need to for a particular program, then you might question, do I need that program? But the key point is that you do the operational analysis, you just don't go in and cut things. And then you need internal controls on how to manage the monies. Okay, then fundraising. So as we said before, it's a continuous process that you got to work with every year. The first thing is to categorize the donors. You're going to have individuals. Legacy are people that are putting your organization in their wills, corporations, foundations, government. And then in addition to that, you have the events and selling things. So you can charge for your services. There are a lot of different ways to bring in money. Then identifying the ask, you going for a capital program just for the programs themselves or for general overhead. Foundations don't particularly like to give money just for overhead, but they realize that organizations need to cover their overhead. So they will give you frequently some percentage in their grants, cover overhead. And sometimes they will actually fund overhead also. You have to build a good case statement, and I'll cover that in a minute, what is included in the case statement. You have to do some market research to identify the donors. And there are some sources to go to that list all the foundations in the country, and a lot of corporations also have foundations. The oil companies in particular, I think pretty much all of them have private foundations that operate as 501c3s also. And so you can identify, when you search for donors, you can identify some corporations through their foundations. Corporations are kind of funny that frequently they'll only donate monies through their foundation, but occasionally their operation districts have funds that they can use also for donations. So if you are an employee of a company that matches contributions, you may want to talk to them about matching it out of some operational fund they have, as well as through the foundation. And then you need a good database to track activities. in order to contact donors and submitting applications, writing reports that the donors may require, and also thanking the donors. So a case statement basically indicates, what do you do? What's your mission? Who is your target market? How do you do it? What are your programs, your financials? What are your board? How's your board composed? Your accomplishments and impact, the numbers, the input. We talk about the input, the number of people poured into the program, the output, the number of people that complete the program, and then the impact. How has your program impacted the people who've participated? These are the success stories. And then your vision for the future and future plans. And then specifically, how much money are you asking for, or for what programs are you asking them to cover? And then the market research includes library, the internet, GuideStar, I mentioned .org has the list of every nonprofit in the country that files a 990 form. The grants.gov indicates what government is providing. There's an organization called the Foundation Directory, and we don't have that on there, but the Foundation Directory also lists all the foundations. The Foundation Directory, and another one called Grant something, I'll think of it, but there are two of them that charge a subscription fee. And on the Foundation Directory, which I personally found very helpful, you can sign up for by month. And I found that the year I was doing grants that I could subscribe for 2 months and it wasn't that expensive. But I could get everything I could out of their database and then drop the subscription. And then individual foundation websites will give you more information on what a foundation requires. A lot of foundations have their own application forms to fill out, and sometimes you don't even need a case statement, but if the foundation has a application to fill out, then probably all the information that you have put into your case statement will fit into the foundation's application form. So it's worth doing the case statement in any case. And then the stewardship and donor commitment continuum. It's best to build relationships with the donors so that they continue to give to you. As I mentioned to you, if they forget about you, they may stop automatically. So you want to maintain some sort of communication with them. The donor commitment continuum, there's the initial gift, then they may go to annual gifts, major gifts, and then one ultimate gift if you've got a capital campaign or something, may give you just big chunk of money. And then the stewardship cycle is includes all of these: thank them, inform them, invite them, repeat. The different things. The rule of 7 is that you probably need to contact your donors 7 times in a year to keep your message going with them and how much you appreciate how much they're doing for you and how important their contribution is to you. Then individual fundraising strategies. Fundraising strategies to individuals, website, email, social media, membership, etc. We frequently see organizations that have a commitment letter for the board. So each member of the board will commit to give or get a certain amount of money every year. And foundations like that because they like to see that 100% of the board financially donate to their organization. Now, sometimes, maybe even frequently, you have people on your board who join the board because they give service to the organization, but they don't have any money. And so even though you may set the requirement fairly low, the board may not want to really pursue that. I have had a recent client where I suggested putting in that commitment letter, and they were going to do it, and then they passed the information around to the board, and the board said, no, we're not going to do it. So it depends. It's a way of getting some money, and certainly initially into the organization, is have the individuals make a individual commitment to give or to get, so they can go out and get that contribution from their employer or friends or whoever. Corporations, well, I didn't talk specifically about membership, but this type of membership where you pay to get some sort of service or magazine or entrance to a museum or something by being a member, this is not what they refer to as a membership organization in terms of the state of Texas or the IRS. You're not a membership organization in the eyes of Texas is an organization that's run by its members and not by the board of directors. And usually that's something like a church where they want the members to vote on every little thing. But in most cases, the board of directors are the ones that control and vote on everything. And you can still, even with, if it's a board controlled organization, you can still have this type of membership, as we talk about here, where people become members of your nonprofit because they get certain benefits of that membership. And then you have the foundations and government that you have to do some research as to who's offering what and what the foundation. If you go to their website, if you go to this foundation directory, which you can then search for foundations that give in Texas or in the Houston area, or give to a certain subject matter. And in that search, it'll come up with all the foundations that are active in that area. And then you can go and look at the websites of those foundations and see if they give to your specific service. I did one. It was a mistake on my part, but we were doing a project for a group of animal rescue organizations. And I wanted to apply for a grant to the Frost Foundation because we have our bank accounts with Frost Bank. So I thought they might be receptive to supporting a program we had. And so I wrote a grant application to the Frost Foundation, and I found out this was not the Frost Bank Foundation. It was a Frost Foundation in somewhere in Arizona that only gave grants in New Mexico and Louisiana. So it was just a complete waste of time. But you can do these searches and come up with the right names to find where you might apply for money. Okay, this is the last slide, and it basically is saying some of the things that ESH can do to help you. We're here to provide help for organizations. We can help you start up. We answer questions. We can hold your hand. If you're doing all the work, we don't charge anything. If you're, and we do, in fact, I just recently created a mentoring program because I had a few people who would just call me like every other week with a question. And so I said, look, if you're going to continue to do this, and they said, yes, we're going to do it. And I said, well, let's do this mentoring program. And in the mentoring program, we offer to have a consultant available for a 1 year. And the commitment is to do on the average of 2 to 3 hours a month for 12 months. And then if we do some mentoring for a month, then we charge them for that month, like $100 a month. So the maximum exposure is $1,200. But if they don't ask for anything or we don't provide any mentoring for a month, then we don't charge them for that month. And we've had a fair amount of interest in that program. We've had only one person has signed up, and another person is in the process of signing up. But it's there. If you don't sign up with the program, we're still going to answer your questions. It's just that if you want to go back to the same consultant each time, if that consultant's not available, you're out of luck. You're not going to get that service. You have to go to somebody else. So it is a program, and we get a lot of, get a lot of requests for assistance on our website. You can, and when you go to our website, you can look up requests for assistance and apply for assistance through that application. And we'll get back to you within a week or so and talk to you a little more. That invariably, whatever you're asking for in that request, that's not what you really want. So that's why we need to call the people who send the requests in and discuss it with them. If it is what they want, then we try to address it. If it's not, then we try to point them in the right direction. So we're here to help our people. I am a volunteer. I don't get paid. Our consultants don't get paid. We have one employee and we have an office we have to maintain. But other than that, we don't pay anybody. We do carry insurance, directors and officers insurance. I can't remember if I mentioned that before, but that certainly is something that you got to look into when you form the nonprofit, since in the US these days, people are suing for everything. You don't want your board members hopefully exposed to a lawsuit just because they're on your board when they have had nothing to do with the programs or anything that happened that the organization was involved with. So with that, I'll open it up to questions. I'm gonna stop. Maybe the best thing to do is to stop sharing. Whoops. And then open it up. If anybody's got any question now, you can just unmute yourself and ask the question. I'll point out that Sarah Carruthers up here was one of our satisfied customers. We helped her form our nonprofit, and she's now a consultant with us. How long have you had the nonprofit running? Sarah? Unmute yourself. Tell us how long your nonprofit's been running.
It's been running for 4 years. I shadowed a nonprofit for 5 years, and I'm now working for that nonprofit as one of their directors of one of their programs. So it's very, very wise to shadow an organization or nonprofit that you admire that's doing something uniquely close to yours that you can get that information and work one-on-one with. I've been very satisfied with ISH, and that's why I became a consultant. And I still continue to learn by serving as a consultant.
Okay. Let me go through on the chats. There are several questions. First one, I'm interested in tying going from a for-profit business into a nonprofit. That can be done. If you're going to want to run both at the same time, you have to be very careful of having a firm wall between them so that there's no, you can have people working on both or volunteering for both, but you have to make sure that it's completely separated financially and there's no conflicts of interest. If you want to convert a for-profit to a nonprofit, actually that question usually comes up in terms of an existing LLC going to a nonprofit. And there is a specific form for doing that. There isn't a specific form for going from a for-profit to nonprofit, because the for-profit you can shut down at any time. And we recommend, even for the LLC, that if it's not too much of an imposition, shut down the LLC and just start a new nonprofit, just to make sure that you don't get any of these conflicts of interest. And it's also, to form a nonprofit is only $25 with the state. To convert it from an LLC to a nonprofit is like $300. So if you can do it, then we recommend always just close down the LLC or the for-profit and just open up a new nonprofit. Okay, then we have a thank you. Okay, so it looks like there are no more questions per se. Anybody got any specific questions? We do have a survey, which, what, lady, can we send it around now or we send it around later?
Bert, could you talk about the selling products for the nonprofit? You said you could sell products for a nonprofit. Could you expound on that a little bit?
Well, actually, I did talk about that and said that that is an option if you have a product to sell. Now, if you're selling a product that has nothing to do with your mission, but you're doing it to make some money, that may be questionable from a IRS tax standpoint. If you are selling something that's definitely related to your nonprofit, then there should be no question that's tax free. There is a difference between paying a tax by the nonprofit and selling something and collecting a tax. This tax exemption that I talked about for the state, that is for a sales tax. That is, if you pay for something, if you were buying something as a nonprofit, you do not have to pay sales tax if you have this exemption. But if you are selling something through the nonprofit, the state expects you to collect the sales tax and send it into them. So you can't avoid that. Okay, we're sending out the survey now. Is that, Lady, does somebody have to go to that website to get to the survey?
Yes. So you click that link and it'll take you directly to the survey. I also will be sending this link with the presentations and the recording.
Okay, that's good. So was that answer the question on sales tax, Sarah?
Yes, it does. Thank you.
Now, there are some operations that there's, for example, one of the clients that we had in the past was Brookwood Community. Some of you may be familiar with that. It's a home in Brookshire that houses physically and mentally challenged people. And it's big. It's got about a $14 million a year budget, $40 million in assets. And they have a restaurant in the one of the buildings there. And people from the community use that restaurant. It's a very popular restaurant. And the question in our minds came up, can the income from that restaurant be included in the income to the nonprofit, the Brookwood Community, or does it come into the type of income that they would have to pay taxes on? And what they've done at the restaurant is they have some of their residents serving there as bus boys and girls doing the smaller jobs. They're not waiters usually, but they have them working there and they get paid a little money for working there. So they incorporated the restaurant into the operation of the community, and therefore they don't have to pay any taxes on it. So you just have to, if you're going to get into a business that's going to be making some money, you just have to look at whether or not it's directly related to the nonprofit's purpose or not. Okay, any other questions? Anybody raising their hand? No. And anybody want me to expand on anything in particular? No, okay. Well, as Levy said, we'll send you a copy of this presentation. We'll send you some additional information. We'll send you a link for the survey. And this year, we've gone back to trying to do at least one webinar a month. It may not work out completely that way, but we want to do more webinars. We use this as a means of getting ourselves out to the community, knowing, so you all know who we are and that we exist and we're there to help you, and just come and ask us questions if you haven't. And that's about it. Okay, Levi, I guess we can shut it down.
Yes, okay. All right, thank you, everybody. Bye.
Bye.